The breaking news from Wall Street, and it's been one of the worst days in years for stocks. At the closing bell, the Dow finished nearly 900 points down. Here's a look at the rest of the numbers. The S&P 500 also down about 3%. All of this as President Trump moves forward with tariffs on some of America's largest trading partners. Joining us this afternoon is Brian Jacobson, Chief Economist at Annex Wealth Management. Good to talk to you again. What do you make of this day on Wall Street?
Yeah, it was quite the day. A lot of investors had a little bit of a bruising here, but I think that really it can feel worse than it actually is. Just for some historical perspective, in a typical year, you can actually expect to see stocks fall probably around 14% or so from peak to trough. So it's not unusual to see these types of declines. It's just we haven't really seen them in a couple years. So I think that a lot of investors maybe got lulled into a sense of complacency, thinking that stocks only go up. In fact, it can oftentimes be quite a bumpy ride.
I'm glad you mentioned that perspective. Since Inauguration Day, the Dow has fallen 2.5%, the S&P 5% over that period, the NASDAQ 10%, and the stocks, it seems, in the last few weeks or so have been swinging up and down with the on-again, off-again tariff announcements from the president.
Well, that's correct. This type of uncertainty. So we went from election uncertainty last year to policy uncertainty, but now it's becoming more certain that we will see some types of tariffs. And so I think that people are now shifting their attention more towards what could be the fallout. Will it cause a recession? And when we think of in terms of market drawdowns, they're oftentimes driven by fears of the future, fears of a recession, fears of inflation, fears of geopolitical issues. But we oftentimes rebound from those because the economy is quite adaptable. And the typical drawdown that we see in the markets can oftentimes be very quickly followed by a recovery. So if you're thinking, do I get out? Well, maybe you should just stick with it, take that longer term view, because unless you fundamentally think the economy is going to definitely go into a recession, this is the type of thing that could just be background noise.
Is it too early to be even discussing the word recession at this point?
I think that it is. A lot of people are afraid that maybe with the first quarter of this year that we are basically kind of skirting along at 0% growth, pretty close to that. It might be a little bit stronger than people are somewhat fearing. And then will the tariffs actually result in a recession coupled with some of the federal job losses with federal government employment? I think that the fundamental strength of the private sector is strong enough that we shouldn't really experience a recession. So we're viewing this more as an opportunity to reposition, to re-engage with clients, to just really coach them on the idea of keeping that your eye on those longer term goals and sticking with your strategic allocation.
And so I want to get to something the White House's top economic advisor, Kevin Hassett, said this morning, arguing the uncertainty of the market is actually working in the U.S.'s favor. Let's take a listen.
What I'm seeing in the jobs number, for example, is that the uncertainty is actually creating jobs in the U.S. Right now, we just saw 10,000 manufacturing jobs created.
Referring to the jobs report that came out on Friday, a significant number, not as much as folks were expecting. Do you buy his argument?
Well, I think that it's a very nuanced argument that he's making here, is that because of tariff uncertainty, that it's already incentivizing businesses to try to relocate manufacturing here in the United States. But keep in mind that manufacturing isn't the dominant driver of employment growth. A lot of other businesses are seeing the uncertainty and putting on hold expansion plans. So we can see the 10,000 jobs created in manufacturing. Maybe that is due to the uncertainty. But what we don't see are the jobs that were not created due to the uncertainty, with businesses deciding that they're just going to wait to see how things kind of shake out.
All right, some great perspective. Always good to talk to you, Brian Jacobson, Chief Economist, that is, at Annex Wealth Management. Thanks for your insight today.